I'm here to talk to you about private health services plans, or PHSPs, and how they work when you have employees. The Private Health Services Plan has been around since the early 1980s. CRA IT Bulletin 519 is now regulated by the Federal Life and Health Trust. We, PUHL Employee Benefits, represent the Certified General Accountants for Alberta as well as Manitoba, and also the Better Business Bureau. Before I get into the Private Health Services Plan, I'm going to take a step back first and give you a little bit of theory behind it and why they're becoming so popular with business owners these days. When you look at your traditional employee benefits package, you're going to have your life insurance, your disability, possibly some critical illness, long-term care, and then the health and dental component of the plan. And the health and dental part is going to be by far the most expensive part. And the reason being, you can break insurance into expected and unexpected claims. Unexpected claims is your true insurance. That's like your life insurance, your disability. You don't expect to die, you don't expect to be disabled. When we're talking about health and dental costs, they're expected claims. You're expecting to go to the dentist this year and get your teeth cleaned. You're expecting to get a new pair of glasses. There's no company out there that says, you know what, we'll pay for all that for you guys. That's not how it works. How it works is, right in your contract for the health and dental part, there's going to be a target loss ratio. And it's usually between 70 and 75%. And so what that means is that for every $1,000 you pay them for health and dental premiums, they're only going to give you $700 back. And then if you claim more than that year, next year they increase your premium to hit their target loss ratio. So it is not insurance, it is a line of credit, is how it works. And they like to call it 30%. But actually it's costing you $300 now to get $700 worth of claims paid. 300 is actually 42% of 700. So now you're running a line of credit concept of paying 42% per claim, whereas a private health services plan is a pay-as-you-go program that charges 5% per claim. It's not that traditional group benefit plans are bad, because they can be very good if you can afford them. What many larger business owners will do is they will run a private health services plan in conjunction with a traditional health benefits package as a slush fund to pay for the portions that their traditional plan doesn't cover. So now this money is a tax-deductible business expense to the company and flows 100% tax-free to the employee. The most important part to take out of this is that you now have complete cost control as the employer. You decide the dollar limits, and there's no way you're going to spend more than that. There's no premiums to pay out to an insurance company and no premiums to ever go up. So now that you've allocated these credits to your employees in their health spending accounts, the employees can now go and spend this money on their eligible health expenses. And so eligible health expenses, as prescribed by CRA guidelines, is going to be anything that's medically necessary and done by a licensed practitioner, or anything prescribed by a licensed practitioner and dispensed through a pharmacy. So that's of course going to include your dental, doctor, vision, but you're going to have massage therapy, acupuncture, naturopath, osteopath, psychiatrist, psychologist. The list goes on and on. You can find a full list of covered expenses on the CRA website, or on our website, or by contacting us at the information provided at the end of this video. Over and above this now, the employees can take this money and actually buy other health plans. Now I'll briefly touch on some of the sub-plans that we offer as well. So now the employees, over and above just their straight medical expenses, can now go and buy, for example, an individual Blue Cross plan, one of their plan A, B, and C's, or a group medical services plan. Other sub-plans we like to make sure our clients know about is the Blue Cross non-group card. What that is, it's actually administered right through Alberta Health and Wellness. It's the seniors benefit drug card that you get when you turn 65, but in Alberta you can actually buy that card before you turn 65. And what it's going to do is going to pay for 70% of your prescription cost, with your 30% capped at $25. And you can buy 3 months worth of prescriptions at once. The plan also has some ambulance and some home nursing care, mastectomy, some other brief coverage on there as well. Another plan that we tell our business owners about is called our Catastrophic Health Base Plan. What it is, it has 4 components. It's $150 a year. And so $10.50 a month, and that's going to cover your employee, their entire family, so spouse and dependents. It's going to have 4 things. The first is travel insurance. It's going to cover up to $1.5 million per injury or sickness with a $0 deductible. And that's going to be for 60 days out of province. So you can leave Alberta, you have 60 days of coverage no matter where you're going in the world. Return to Alberta for 1 day, you leave again, you have another 60 days worth of coverage. The second part of the plan is a $2,000 per person health deductible. So this is non-emergency stuff. In province, if your health expenses for any person in your family reach $2,000 in a year, this plan will kick in now and pay up to $125,000 per year for 2 years. So it's a nice little umbrella. You know your health expenses are never going to go above $2,000. The third part is a will preparation and documentation kit. And the fourth is a legal assistance line. We give you a number to contact a lawyer. They'll answer any questions you have about anything, business related, personal related, and they'll give you free advice. Again, more information on any of these sub-plans can be found by contacting us at the information at the end of this video or by visiting our website. The most important part is that your employees now have flexibility. Employee A can go out and get glasses and go get his massages that he needs to do. Employee B can go see the chiropractor and buy the dental plan for his 5 kids. And employee C, maybe they're healthy and they can put their money into a group RRSP. Now I'm going to talk to you a little bit about how to structure your classes and divisions of employees to adhere to the CRA guidelines. Now, the most important thing to realize is that there cannot be an owners-only class. If you have arm's length T4 employees, a portion of them must be included in the owner's class and given the same benefit that the owners are receiving. The rules now stipulate that there cannot be more than a 25-75% split between shareholders and employees within the class. So that means if there is one owner of the company, there has to be at least 3 other arm's length employees receiving the same benefit that that owner is receiving. If there are 2 owners, there has to be at least 6 other employees within that same class. The most common way that we see the divisions being made is single family and couple rates. Now, you can have different divisions within a class. So for example, you can have a management class and a labor class, for example. Now within those 2 classes, you could have different divisions. So within the management class, you can have single family and couple rates. Similarly, in the labor class, you can also have single family and couple rates, for example. Now you get to choose how you want to structure these classes. Other ideas, what we see other business owners doing to keep the rules fair for everyone within a class. We've seen percentage of income. So for example, everyone in the class gets 5% of their annual income in a health spending account for the year. This way the higher income earners are going to get more to spend than the lower income earners within the company. Now I'll briefly talk about some of the options here you have when setting up a private health services plan. So one of the options is called a wellness benefit. This is going to be for some of your healthier employees who aren't using their health spending account dollars, but you're looking to give them some sort of benefit as well. This will now allow them to use their money on things such as health spas or gym memberships. But now the money that they use is now going to be added onto their taxable income for the year. Another option is called a group RRSP option. And so what that allows is some of the employees who know they're not going to use their health spending account dollars that year, they can now put a portion or all of that money into a group RRSP at the beginning of the year when they receive their credits. You could not wait until the end of the year and then put money that you didn't use into group RRSP. You have to know you're not going to use it at the January of the year and put the money into there. Now I'm going to explain a little bit about the mechanics behind the PHSP and how the claims process works. So the first step is to get the completed registration package back, as well as an employee enrollment form completed on each employee, and they're going to give that back with a void check. And we're also going to collect a void check from the company, and we do everything electronically. So the employee is going to go out and purchase their medical expenses, and then they're going to keep all of their original receipts and submit them in a claim to us. Once we receive their claim, so once the claim is submitted in about 10 days, the employee is going to see the money pop up, and it's going to appear right in their personal account, and they're going to get an email saying that you had a claim go through worth X amount of dollars, and you now have Y amount of dollars left in your health spending account for the year. We never take money out of the business account without telling you about it. So every time you submit a claim to us, we send you an electronic authorization form with the claim amount, and you sign off on it, and you can either scan and email that back to us or fax it back, and then we will process the claim. Where you see the benefit as a business owner is that now all of your family's medical expenses are now 100% tax-free. Right now, for you to go and spend $1,000 on health expenses for your family, in a 40% tax bracket, you'd have to make $1,666 to give the $666 to the government, which is the 40%, to spend your $1,000. We charge 5% per claim. So on $1,000, we'd charge $50. So if you're in a 40% tax bracket, we save you $616 in tax per $1,000 of health expenses. So just to recap, the private health services plan gives you, the employer, complete cost control. There's no premiums to ever be paid out to the insurance company. The only time money ever leaves your bank account is when your employees actually make a claim. It gives your employees flexibility, and we charge that low administration fee. It's not complicated, we make it simple, and CRA friendly.